20, 2021, things of that nature, around those years. Um, some people missed out on a lot of upside opportunity off FOMO and liquidity and things like that. I mean, like I had friends become millionaires, off of that. And so I've noticed that whenever I'm uh, getting myself into like one side of the coin, that I tend to miss out on opportunities. And so that's one of the reasons why, I've shared on my channel recently. Hey, last year, I was too bearish. There were stocks that I was buying at pennies on the dollar, and I just kept like, it was like the end of 2022. And I was like, oh, it's going to go down further. It's going to go down further, and so I'm getting caught up into this camp of like, recession, these stocks are going to drop another 25%. So why get in now? Things of that nature. And many of those companies, I mean, they've skyrocketed.
Hey guys, welcome to Capital Cosm. Today I have a special new guest for you. It is Mr. Darrell Thomas from the Money Level Show. Darrell, thank you for coming on, my friend.
Woo, 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 woo. Hey, appreciate you bringing me on, Danny. Glad to be here. Just today's feeling like a good day, when you hit me up about the interview, I was like, oh yes, this will be great because I've been following your channel for a while. You came on my channel back in November, and I just think that it's good that we're connecting, and this is a family. We're all trying to figure out this thing together and all trying to prosper together. So I'm happy with what you're doing on your channel.
1000%. Darrell was the first person to have me on for an interview this past November. So super appreciative of that, Darrell. As always, guys, nothing in this video is financial advice. I am not a financial advisor, neither is Darrell. So please do your own due diligence. With that, Darrell, for those who may not know who you are, go ahead and give us a background, your story, what got you into investing, and what sectors you're looking at in particular. What interests you at the moment?
Yeah. So my background, I mean, I'm originally from Oklahoma City, Oklahoma. I currently live in the greater Seattle, Washington area. And my background has nothing to do with finance. I have a background of growing up in poverty, a lot of generational poverty. Um, Majority of my family doesn't own a home. I think me and my sister were like almost like the first ones to own a home, and outside of that, it was my grandma, so stuff like that. Not having financial education, not, really growing up, learning how to invest or knowing about stocks or anything of that nature. That was like this stuff was like an external kind of thing outside of my reality growing up. And so, and the consequence of that, I mean, it was, got out of, high school. At that time, I was in the streets. I used to be, I used to sell narcotics and things of that nature, and been to jail, things like that. So I was living that lifestyle. But then even when I like went to college and stuff, like I didn't even know how to manage debt. I didn't know anything about debt, didn't know anything about interest rates on the debt, and therefore, accumulated, debt in the educational sector. And yeah, so I mean, like my background, like that's like that's it. And so I didn't really begin to learn anything of this nature until a friend of mine, I think it was back in 2017. I was married for about 2 years at that point, and still married now, but um, he paid for me and my wife to do the Dave Ramsey Financial Peace University. And then that's when I learned, about debt, budgeting, things of that nature. At that point, we were like almost like cutting off like cold turkey, everything, and so We were like, oh yeah, we're eating the beans and rice, all of this stuff, right? And so it was very helpful, but it was also like we didn't learn the balance of like being able to also still enjoy yourself. And so then, then comes the relapse, right? It's almost like cutting off cold turkey, someone, getting clean off substances or something. Sometimes it's like you have to take it slow, you know what I mean? And then for me, it was like, we relapsed, got back into poor financial habits. Then the pandemic started. And when the pandemic started, I began to feel a certain way, just about myself as a father, as a husband, because people were losing their jobs left and right. I was working from home full time. At that time, I was a juvenile probation officer. So, I went from the streets to like getting my degree in criminal justice to becoming like a probation officer. So like that was it was like a just total other side of the fence type thing. And
Well, you know how the game is played.
yeah, yeah,
What
yeah.
better what better candidate? Yeah.
On both sides, it was crazy. The crazy part about that is when I went to jail before, I had like a deferred sentence and everything. And I was putting this like criminal history on my applications for a long time. And it wasn't until I started working for the courts that I learned like, oh, a deferred sentence means that you can get the charge expunged. So I was going years um, putting this criminal history on my applications. And then when I learned that, I called down to the county. It's like, hey, this is a deferred sentence. They're like, yeah, you could have got this expunged years ago. So, it's just kind of like being young and not really, you know, being cognizant of like the things that are happening before you with school, justice system, all those different types of things. And so pandemic happens, everyone's losing their jobs. I'm working from home. I don't know if my job's going to be gone or not. Have no savings in the bank, anything of that nature. And so what I did was I picked up a book, Rich Dad, Poor Dad, and my landlord gave this to me like back in what I think it was like 2017, 2016, 2017. It's just been sitting on the bookshelf the whole time. So I pick it up. I got enough time on my hands. I read that and like it was like the scales fell off my eyes, and because I was already feeling like, man, like we're one paycheck away from disaster, you know, um, I don't want to be dependent on the government, all these different things. And then so I picked up that book and it was definitely life changing. And from that point on, started going to Robert Kiyosaki's channel, like, okay, what's he talking about here? Learning about Mike Maloney and all the people he interviewed, George Gammon and everyone. So then it just took me down this rabbit hole of like just interest and just really wanting to learn how money works and how to become financially free. And so that was like the start of the journey. And then I started having a lot of conversations with friends as I was learning all this new material, learning about gold, everything, right? And then the conversations with my friends were like going for 2, 3 hours sometimes. And it was just like, I need to start a dang podcast or something. Like I gotta get this stuff out of me because it's just like a lot of information that's just being compiled. And so yeah, so I started the Money Level Show in 2020 and been rocking ever since.
Yeah, fantastic. So on the Money Level Show, what exactly do you guys cover? What sectors do you guys look at?
Yeah, so I cover a lot of things. I mean, it's kind of hard because when I started the show, I wanted to um, be very versatile. I didn't want to put myself in a box. I didn't want to just be about gold, even though I'm a gold buck. I didn't want to just be, about uranium and commodities. I wanted to touch on, okay, let's touch on bonds, let's touch on like tech stocks, let's touch on crypto, things of that nature. But I've also noticed like, in the content creation world, like a lot of times people want to you to have a focus, and so we cover I cover a lot of things. I cover recession, I've talked about real estate. I'm actually in conversations with another guy who owns a channel, and he does real estate. And just trying to like really reach different people and let them know about different investment classes so that you can become more diversified. I mean, that's like a really key thing that I focus on. And so, yeah, mostly macroeconomics. I do a lot of macro, but I didn't start really getting into the micro until about last summer. I went to Rick Rule's conference, and there I started learning about exploration companies and royalties and streaming and all of that. I've been to some of his boot camps, but I was actually there in the midst of the people and everything. And yeah, that's kind of like where I started trying to shift more of my focus. Is like, okay, let's get into the weeds of some of these investments, because I could say, here's the bull case for uranium, supply deficit, blah blah blah, da da da, right? But then like there's like other layers to it. There's levels to it.
Yeah. So you mentioned, meeting all of these experts. You do interviews as well on your channel. I've noticed you've interviewed the likes of Lynn Alden, Brent Johnson, Rick Rule, and so many more. What are some of the key things, key takeaways that you've gotten from interviewing these experts?
Yeah, I think the key that's a really good question, because sometimes like the key takeaways is like, dang, I could have did that interview better. I should have asked about this. I should have but I think that the key takeaways that I get is because I already watched them like outside of like interviewing them. And so when I'm interviewing them, I mostly focus on, try to focus on building a relationship. Obviously, you want to be ethical in your interviews and not bring up controversial stuff, and like, because that can obviously burn some bridges. And um and I think that the most things that I've taken away has been more macro related, in terms of with Lynn Alden and Brent Johnson. Okay, how important is the dollar? How fast is this process gonna be taking for any type of change in reserve currency, things of that nature? Because you do get a lot of like, um, I guess, fear mongering, or however you want to call it, right? The dollar's going to collapse tomorrow,
Yeah. A lot
and
of doom
it's
and gloom.
yeah, and so for me, like it's helped me like psychologically be able to invest and really think through like, okay, pros, cons. There's like so many arguments, for recession, no recession, de-dollarization, no de-dollarization. Um, there's so many arguments, right? And it's so like for me, it's like, how am I processing and filtering through all of those arguments and developing my own view? Because I can easily go to one camp or another. Like I can easily, for example, um, obviously we had a lot with the crypto versus gold, Bitcoin versus gold. And I was more in the gold camp, but I did invest in crypto some. And I think that even in that scenario back in 20, I remember my cousin contacted me about all options on Nvidia when Nvidia was at $100, 100 and something dollars in October of 2022, and but that mindset of being too bearish, is what prevented me from, capitalizing on those gains. And so, it's really just when I'm interviewing like Lynn Alden, Brent Johnson, and everything, like it's all about finding a balanced type of view. And that's why, Lynn Alden's one of my favorites, because she'll look at both sides of the case and kind of give you some she helps you be more emotionally intelligent about a lot of these different arguments and stuff. So
Yeah. So how do you deal with hearing both sides of the argument, depending on who you're interviewing or listening to? Like, how do you determine what's actually signal from noise?
yeah, I think that, I really like when Jay Martin talks about, it's not about whether someone's right or not. It's more about timelines.
Hmm.
Some people may feel like the dollar's going to collapse this year. You know, some people may feel like, gold's going to go up significantly this year, or crypto's going to go up significantly this year, or whatever. The Fed's going to cut rates this year, and I just think part of it is positioning myself. Like, so for example, like, you do get the noise and you do get the signals, and there's multiple signals. So like there's signals for a rate cut and there's signals for the Fed to stay tight. Okay, inflation's still above 2% target, blah blah blah. Like if they cut, inflation could come back. All these different things, right? And so I think that it's really just about positioning myself for whatever possible income, and that's whatever possible outcome, and that's what diversification is. And so I try not to buy too much into the noise in terms of like going too far this way. That's been like my learning lesson for over the last year, because I did miss out on a lot of gains, and not in uranium, but in some of these other sectors that yeah, I was like, man, I missed out on a lot of money.
So, what are some of the things that you learned, let's say last year or over the course of the last several years that you've had your channel, that that you think that you've corrected for this year or at the moment?
Uh, I think for this year, um, well, one piece of it, like, so right now I'm doing this series called Back to Basics. It's like I've caught myself like getting too much into like, the hype of, commodities bull market, like, and I'm like ultimately just super bullish commodities. And but it's like, okay, well, I got debt I need to pay off. I got like just these, I need to build more capital. I need to build more savings. I need to like, be a little more wise on the basics. And so that's the reason why I, started this Back to Basics series, just to like give the audience like some reminders of like, hey, don't forget, like, don't let your lifestyle creep. I mean, because even for me and my wife, like we built the most wealth we ever had over what 2020 to 2022. And I made some poor financial decisions. We made some poor financial decisions. Like we accumulated debt. I mean, the money was flowing, the interest rates were low, all of those things. And we made some poor financial decisions. And I think that, ultimately, that's like been the lesson, like it's like, okay, like, yeah, you had the most wealth you ever built. You thought you had it made, and you made poor financial decisions. You kept spending money, you kept eating out, you kept doing all these things, and that which compounds the compound effect, right? And and so now it's like this year, it's like, hey, I'm getting a haircut once a month. Hey, you, and hey, we're budgeting. Hey, we're not eating out this week. Things like that.
That's actually my haircut cadence as well.
Yeah.
Once a month.
Yep, exactly. And so yeah, so those are like some of the biggest things for this year. It's just like, okay, well, I can give people, the case for commodities and everything. And Rick shared this in our recent interview, where his friend, had $250,000 in credit card debt, but then he had 350,000 in like junior mining stocks or something like that. And and so like some people are like not like, they get into like the excitement of the commodities market, like you can outperform and everything, right? And you don't want to miss the moves up, right? Obviously uranium made it a huge move up. Uh, but at the same time, man, if you don't have your financial principles and the basics and the basics of money and respect for the dollar, like even if you don't like the dollar, whatever, respect for the dollar and its power that it still has, like you can easily, end up in a lot of debt. You can easily end up losing a lot of money and all those things. And so that's kind of like, the main focus for this year personally. I'm still building my portfolio, um, looking more for the long term. Right now, obviously, still in uranium. I'm still buying uranium. Like on these pullbacks, I'm still averaging in dollar cost averaging in. Um, I'm bullish oil. I don't know if that's gonna play out this year, next year, or what, but I do believe that oil has to go higher. And obviously the metals I've been back and forth on. Like I rather hold the physical, but uh, gold mining stocks, I don't know. It's like this is where you're supposed to invest. Like, it's in the hated assets, right? It's like, okay, Jim Rogers will go and he's like, I'm looking for the most hated asset. Gold mining stocks is just like, man, I don't know, man. I don't know. They are not moving anywhere, and so
I mean,
so
I've said it before in previous talks and interviews. I hate gold and silver mining stocks, which is
Mhm.
probably a good indication for gold mining stocks.
Yeah, yeah. So and I think even with that, like, just think about that, for example, like when we get into like these camps, right? You have like the actual stackers, right? Which I'm friends with quite a few stackers. And then you have those who speculate, hey, well, you have your physicals here, but where you're gonna make the most percentage is getting into the stocks and everything. And some people have the tolerance and the patience. Some people have the capital to sit and you know, wait a long time for these things to play out. And some people can take bigger losses, right? For me, I'm not in that position. So, there's like one stock that I'm owning, well, two gold stocks that I'm owning, but I'm not heavily positioned in them. I'm like more positioned in uranium, oil, and then also uh Bitcoin
Oh,
ETF.
Bitcoin.
They've been getting killed, the Bitcoin ETFs.
Yeah. Yeah. So walk me through how you identify opportunities like that, Darrell. Like, are there any metrics or key factors that you look at? What do you do?
Yeah, so um one thing is like, for me, like I've been learning how to do more valuations and things like that. Like I'm still in that learning process. But it can be it's also kind of tricky because like, we seem to be in an environment where valuations don't seem to uh, matter as much. Like I mean, when you look at the last, you know, 3, 4 years, I mean, you're seeing the Magnificent Seven, at trading at, 30, 40 times, 50 times earnings. And you're like, where is the valuations? Like, isn't this supposed to be like, overvalued? When is that going to correct? Things of that nature. So, however, like, I still try to like have some type of, uh, common sense of like, okay, I'm not gonna chase the crowd. I'm not gonna chase the Magnificent Seven. Like, but people are making money over there, right? I mean, Netflix just went ballistic the other day. So I think that um, one piece of it is, people that I follow, I do subscribe to newsletters that give me ideas, right? Because I don't have a lot of time. I work full time, got 3 kids, doing this channel on the side, building this up and everything. Like, I don't have time to like go and do valuations, like, and like dive into the weeds of like, investor, reading the 100-page investor release and, stuff like that. Like, that's a lot of, it takes a lot of time. And so, like, there's people out there that filter through a lot of that for people and simplify it. And so like I do subscribe to certain newsletters where I learn about certain companies, and then I'll go do like some additional research. I'll go watch the CEO talk, or I may look up the CEO, go look at the balance sheet, things like that. Um, Balance sheet, cash flow statement, um, things of that nature. And then then decide like, okay, is this a undervalued company that I'm willing to invest in? I look at the price to earnings ratio, look at assets, and then also look at the macro, like, okay, if I'm bullish on uranium, this is what I'm learning about this company. It was recommended by this person. Well, not recommended, but this person's investing in it based off X, Y, and Z factors. And then it helps me save a lot of time, and so that's kind of like my investment case now, like how I choose what I invest in.
Yeah. So when you're talking to people outside of our sphere, let's say, how do you communicate this stuff to them? Like communicating, like, or do you even try to communicate the uranium bull thesis, or try to communicate the commodity bull thesis? Number one, do you actually try to present that to them? And number two, if so, then how?
Yeah, I think when I do stream to my Facebook, and so my Facebook, it has like family on there, cousins, uh, friends, and some people actually tune in. But I've noticed that when some people tune in, like my sister, she would tune in and she's like, "What are you even talking about?" So, and that's one of the reasons why I did the Back to Basics series too. It's just because like when I'm talking to like my coworkers or anyone that's outside of this financial space, like they're not like sophisticated or just like well versed in a lot of these things. Most people depend on their pension, depend on their 401k or their fund managers to manage their assets, things of that nature. A lot of people don't know the dangers of not owning gold and insuring their wealth and things like that. And so um, I've had a lot of conversations with people, but I wouldn't say it's translated to like um, them acting on the information that I've given them. You know, I mean, like I was just struggling like recently, like so. This is like how complex it could be, right? So I'm actually uh, I'm finessing Acorns right now. Acorns had this deal. Oh, we'll give you $300. You get two referrals, sign up and invest $5. So I'm like, okay, yep. Okay, so then I spend like 30 minutes, 35 minutes explaining to my wife and her friend about how this works, right? So then my wife signs up, I get the $300. I'm like, hey, this is easy money. They offer her like $1,000, $1,100 to get four people to sign up. And I'm like, hey, I'll take a cut of that. Let's go get four people to sign up, right? So I'm like having to like explain like all this stuff. I had like a conference call with two friends, like explaining it. It's not a scam. This is our chance to get back at the bigs, you know, all of that. And I'm giving them a cut of the money, you know what I mean? Like, and it's like people are so uh cautious. A lot of people are fearful of like scams. People are afraid to lose money. Um, I mean, I had a couple of friends that they were like, hey, that pretty much I was like, hey, I give you $50 and all you're spending is $3 for a monthly subscription that you just press a few buttons to subscribe. And then you invest $5, Acorn will match your $5, right? $8. You just putting $8 out of your bank account. And I'm giving you $50, right? And they were like, yeah, we're gonna decline. We have too many subscriptions, blah, blah, blah. It's like the reward is like here, the risk is like here. All you gotta do is press a couple buttons to cancel your subscription. You're getting, what? You're profiting $52, for very little time. just to open like a brokerage account. So, you know, like those are like some of the mentalities I'm dealing with, you know, and no shame to my friends or anything like that, but it's just like when you see like I understand risk reward, you know, I'm like, okay, here's the risk, here's the potential reward. I can afford to lose $3 on the subscription. You know what I mean? Like I'll spend that on a freaking coffee I don't need or something, right? This energy drink here. I don't drink these a lot, by the way, but I'll spend that on that, right? That's going to be wasteful. So those are some of the mentalities like I'm having to like deal with. And so that's why, you know, I wanted to do the Back to Basics series is to make this like a journey, you know, with me and my audience, but I still, you know, do cover like the commodities and such.
Yeah. Yeah. A lot of people want everything for nothing.
Yeah.
And in this world, to get value, oftentimes there's a price to pay because if it's worth doing, it's worth getting paid for, especially
Hmm.
if it's something of great value. So I definitely get your um, what you're saying there.
Yeah,
There's also
there's
go ahead.
risk in everything. You know,
There's risk in everything,
yeah,
100%.
yeah. Go ahead.
And there's also the sense of instant gratification. So the inability to actually look further out into the future to see returns on your investment, so to speak. And so people
Hmm.
want to be able to see results immediately or in the very near term future, which is counter to the entire premise of the commodities market, the gold market, the uranium market, the energy market. These things are historically multi-year markets.
Yeah,
In some cases, they could last even a decade or more. So it runs
definitely.
counter to I guess, the mainstream narrative. Uh, before we close out, I know you had a few charts you wanted to show us pertaining to a recession.
Yeah,
I'm going to give you a chance to do that, Darrell.
yeah,
What's
yeah.
your take on the macro outlook for this year?
Macro outlook. I am. I'm kind of neutral between bullish and bearish. I mean, you know, I do want to see, you know, more liquidity. I mean, currently the Treasury is draining the reverse repo market. Uh, there's projections for Fed cuts. We haven't seen the Fed cut yet. Um, I mean, inflation, it's kind of been like you're seeing metrics of, oh, inflation's dropping. And then you say, oh, inflation popped a little bit, you know, popped up a little bit. So there's still, we in an election year. So it's like, I'm like, okay, the logic side of me is like, they're not going to have a crash on a dang election year. That would just be very bad for, especially the Democratic Party. So those are some things like I'm considering. And then, so, you know, I'm thinking like, okay, well, this could be um, uh, a year of massive gains. I mean, at some point, I think that the Fed is going to cut, and so that's kind of my economic outlook, especially if they break something, right? However, you know, I'm still like positioning myself for like, okay, where's the breakage going to come from? Like, has anything broken yet? Last year we did see, you know, the banking crisis. And I know that lending program that they established ends on, I think it's March 10th or something like that. So, you know, I'm just thinking like, okay, well, there's still opportunity for a possibility for, you know, us to have a drawdown in the markets. And so I'm just like, okay, well, how do I position myself? Okay, well, I need to have some dry powder, you know, so that's been a focus, having some dry powder. But then also like not in having dry powder means just like me, you know, saving more. I'm still investing, but I'm just not, you know, not no hand over fist type of investing. Like I'm going all in, you know, or anything like that because I just feel like there's still I just don't feel like we're out of the woods yet. Um, so a couple of charts I want to show related to recession. Uh, Here we have the leading economic indicator. as we can see, every time we have it below the 0% here, we have a recession. I mean, you had
Mm-hmm.
this .com 2008 global financial crisis. This was 2022, but then we started printing massive amounts of money to pretty much avert it. We started QE. Well, we were already started QE, but I mean, we did massive QE there. And then we're still like here, we're still uh, down significantly. And so another chart that I would say really, really matters is this chart here. This is the
Right.
Fed funds and the lagging. And in the black bars, these are how many months it lagged before recession. So, um, I mean, you've had 15 months, 17 months. So, I mean, that's like a year and a half, right? So, I mean, it's it's kind of like, okay, well, we're not out of the woods yet. So those are like some of the things I'm looking at. Another one, this is the purchasing managers index. These big dips here are when we had recession, and we're currently in a dip right now. So obviously it's not as
Mm-hmm.
much as 2008, but it's still below, you know, um, I guess the mean or whatever. So those are just some things like I'm still looking at, and like the soft landing, no landing, hard landing. It's like it's pretty. Um, it can be pretty, just hard trying to filter through all of that. And so for me, I'm just like, okay, well, we still have these indicators that still indicate that recession is either here or it's around the corner. But then you have GDP numbers. GDP numbers come out. Oh, it blows it out the water. GDP, inflation's dropping, right? We added this many jobs. So like it's kind of like, okay, like what the heck is going to happen, right? And so I don't know. There's an argument for both sides, and soft landing, hard landing, no landing, right? So for me, it's like, okay, well, I can still get 5% on my money. So I'm building dry powder, 5% on money, um, knocking off debt. I mean you're knocking off 20%, whatever interest rates you are on your debt, and averaging in the stock. So yeah, that's kind of like what I'm doing right now to balance and hedge myself.
Fantastic. Well, hey, Darrell, go ahead and drop your socials. Where can people find you?
Yeah, so you can find me on YouTube at the Money Levels as in plural show. And then I'm also on Twitter/X at Money Levels Show. And so you can find me there, and you can get in contact with me. You got any questions or anything like that? I'm not the smartest in the game, but I do know a lot of stuff. So hope that you all come tap in with me.
No, really interesting story there, Darrell. Really enjoyed listening to your journey, in this investment space as we all continue to grow and learn more. For those of you that enjoyed this video, be sure to give it a like, comment down below. Let me know what you think. Do you agree or disagree on the fact of a recession coming down the pike here in 2024? Also, subscribe to the channel if you haven't.
Yeah.
Be really appreciated. And with that said, you guys, I will see you in the next episode. Bye, y'all.
And really quick, really quick.
Go ahead.
Yeah, if you disagree, I got thick skin. You know what I'm saying? So like I'll come debate you in the comments or whatever. Like, so you don't worry about, just drop your opinion. If you agree or not, state your case. No insults, drop an emotionally intelligent comment stating your argument, and let's engage in an intellectual debate. All right. So yeah,
Yeah.
appreciate y'all.
So if you've got the balls, go down in the comments section, and Darrell will be there waiting for you. All right, guys. I'll see you in the next episode. Bye,
All
y'all.
right.